This is the third quarter update for the Amplify Transformational Data Sharing ETF, symbol BLOK. We're speaking with Michael Venuto. Michael, what has your attention in the crypto and blockchain space today?
I guess the biggest news has really been around coming regulation, right? There's very few industries that actually could flourish from regulation. The crypto and blockchain industry has had a tough time because of a lack of regulation, right? And it's more about clarity than it is about, hey, here's what we want to do to stifle innovation. The innovation is there. It's whether or not you can actually monetize it that's been lacking in clarity. And I see a lot of things coming positively down the pike. You know, all the negative things that happened last summer. I mean, full year ago with FTX and Three Arrows and all these various things. Now it seems like both Congress and the SEC are being asked to actually take steps to give us some clarity and allow us to utilize these technologies in a compliant way.
Yeah, regulations, always a big topic when we do these shows. What could you see unfolding in the regulatory space potentially over the next 12 months?
Um, the big story is, oh, they're going to approve an ETF. BlackRock's in the game. I think last quarter when we did this, I said no. I think it's going to take some more time. I think that the regulatory approvals are coming sooner. Probably Q1, Q2 next year. The actual implementation is probably a quarter or two behind that because as I still continue to talk to the exchanges, the lawyers in this space, the liquidity providers, market makers, APs, in order for them to settle in crypto, they're going to need documents that AP agreements, things like that. These components have not yet been worked out fully, right? Convincing XYZ giant mega bank to sign a custody agreement with Coinbase is not that simple. There's a lot of pieces that need to fall into place. So a lot of things are coming. At the end. Well, I guess we're talking about third quarter, but we did just see Ethereum futures ETFs get approved. Not terrible amount of fanfare there. It's not something we're looking to invest in block. Um, right now, we don't have any futures-based products within the block universe.
All right. So, for investors that are new to the space, what's the value proposition of using a publicly traded blockchain focused ETF like Block versus just going out and acquiring some cryptocurrency?
Yeah, I mean it's completely different, right? Cryptocurrency is a protocol that you're owning a stake in. It's owning a piece of a technology essentially. Some of them have assets backing them. Some of them have different versions of the blockchain. Most of its future value is it's a very different animal. When you own Block, you own companies, right? You own publicly traded companies that are in the blockchain universe and they walk across multiple different segments. Probably the most well-known segment now is the miners. Which is now right 10 years or 5 years ago when we launched there was barely any publicly traded miners. you know the difference is there's actual assets and audited financials and all those things, and there are parts of the blockchain ecosystem that are going to do well as decentralized, and there's parts that are just going to be a technology and utilized by companies like Accenture or Square or PayPal. They're in the process of doing their own accounting version of a stable coin, so there's multiple different components to it. The other thing is you're not going to be able to own a direct exposure to a cryptocurrency in the current environment in your traditional brokerage account. There are a few that have it, but very unlikely that you're going to be doing that at a traditional brokerage account. And our correlation's pretty high, right? For the third quarter, if you take Bitcoin, it's down about 10%. We were down a little bit or more than that, I think 11-ish%. Um, and on the upside, downside, the correlations are going to be high because we're owning the companies that are involved in that ecosystem. We're strong believers that the upside when it comes to what's going on in the blockchain ecosystem is pretty easy to capture, right? We had a great first and second quarter. And then the downside is the key to avoiding the big ones, right? To moving away from things. So, for example, we had a sizable gain in overstock that we reduced substantially in the third quarter, primarily because of the news around overstock moved away from the venture stuff, the grain chain, and the things that we're interested in, and more towards this buying the Bed Bath Beyond distressed asset. So it was a good reason for us to lower our exposure.
So when you look back on the third quarter, what other changes happened in the portfolio that investors should be aware of?
We continued to add our emerging market exposure, Mercado Libre, Alibaba, Nubank, Wipro. We brought Opera back to the portfolio. That used to be a position that we were really excited about. And over time, we actually exited a couple years ago because of the way management was moving the company. They're an emerging market focused internet company that really hones in on search engine, and then they moved into micro lending, and now they're embracing blockchain, right? That's a great way to deal with that commerce in that space. So the shift has really been taking some profits in some of the miners like Mara. We substantially reduced Mara, overstock, and continuing to diversify into some of these other companies that are now getting back into the application of blockchain.
So finally, as we wrap up, we're recording this in the beginning of the fourth quarter of 2023. What do you see unfolding in the blockchain space the rest of this quarter and as we head into next year?
Yeah, so the big news point, right, is that there's a halving, right? And the halving only really works if the price goes up, right? And the miners can only successfully continue to be in business if the price goes up. Otherwise, a lot of things go and change. Always get asked, well, doesn't it mean it's got to go up? No, it's not like a one-to-one process, right? Usually around the halving, we see substantial movements upwards on the price of Bitcoin, right? And then that kind of flows through to all these other public companies involved. You have such negative sentiment. All the flows are out of crypto, out of Bitcoin, out of the blockchains. All the press is negative. It's surprising to me because there's so much positive things going on in the industries. All these miners are shoring up their balance sheets, preparing for this, for upgrades, for cycles. We've really honed in on the ones that we think are quality. So you've got a lot of tailwinds, right? This industry has been facing headwinds for so long. You've got regulatory tailwinds, right? That's some clarity there. You've got a halving tailwind. You've got sentiment can't really get any more negative. You've got real development of use of this technology. You've got an AI tailwind, right? Like if AI really is going to change the world, which I do think it has that possibility, then it's got to be somewhat decentralized, and decentralized commerce exists in decentralized finance, right? So like an AI that's centralized is the end of us all. We all kind of get that. So I don't see how not at least one of these tailwinds really helps out the kinds of companies we're looking to own and block.
Michael, thanks for coming on again this quarter to share your thoughts about the blockchain space. Viewers, to learn more about the BLOK ETF, visit blocketf.com. That's BLOK ETF.com.